Gold has made headlines of late, punching past $1,000 an ounce. To help make sense of all the bullish sentiment surrounding gold, we have Morningstar Senior Equities Analyst Matt Hodge. Matt, welcome back.
No problem.
Matt, let's cut to the chase. Why is the gold price rising?
Basically, investors are driving the gold price at the moment. More than 50% of gold is going into investment demand. That's a very unusual situation. ETFs are the biggest part of that, and ETFs are a fairly new financial investment tool that's allowed gold to become very accessible to investors.
Matt, for ordinary investors, could you explain some of the differences between buying gold or buying gold shares or some of the other things out there on the market?
Well, traditionally you'd go to a gold dealer and you would buy a gold bar, and that's how people would invest in gold. An ETF, basically you can buy a share on any sort of exchange, and that share is underpinned by gold. They actually buy gold to match with those shares. So it's kind of a proxy for gold, but you can take delivery of the gold as well if you like. Gold shares have been around for ages, and that's been the traditional way that most people have sort of played gold investment.
It sounds like exchange-traded funds, or ETFs, are a fundamental change to the market.
They're a pretty new phenomenon, and they've only been around for sort of the last decade, I guess, at the most. And they've really taken off in popularity with the credit crisis and people, with the gold price going up and people getting a renewed affinity for gold. So it's really allowed people to buy large amounts of gold, and that's soaking up the demand and pushing up the price.
Matt, within the past few years, we've seen gold reach a record price of $1,033.90. Would you expect gold to retest those levels?
Probably. There seems to be a lot of positive sentiment around, and it's really just investors that are driving it. And it's just herd mentality. I mean, if people decide that they love gold, then it's going to go up. If they turn around one day and they decide that they don't love gold anymore, then gold's going down, and gold could potentially go down in quite a big way. But it's relatively expensive in historical terms at the moment.
We've got a few gold producers listed on the Australian Stock Exchange. How big an impact does all this bullish sentiment have on them?
Well, the price helps them a lot because they're all unhedged these days. So it just means a lot better profits. And the share prices tend to track gold to an extent as well. So the spot gold price. So even if the gold price in 5 years' time might be no different, the fact that the gold price today is higher will send these shares up, and you get leverage, you get a multiplier.
Matt, tell us a bit more about hedging.
Well, traditionally, gold producers would sell a certain amount of their production ahead at a fixed price, and the rest would be sold on the spot market, and that's really fallen out of favour. A lot of companies had hedges at $500 an ounce or $600 an ounce, and they would be losing money hand over fist in the current environment. So there's been a real push in the last sort of 5 years to become unhedged, and the gold producers have had to go out and either raise money or borrow money to buy that gold to deliver it back to the parties that owned it in the first place. They basically crystallise those losses, but then future cash flows are boosted because they're exposed to a higher gold price.
Among our listed gold producers, do you see any standouts?
Newcrest is a standout by a long way. I mean, they're very low-cost production, long life, and their exploration team is outstanding. They've shown an ability to acquire new projects and then really find a lot of exploration upside in that. The rate that they find gold, I mean, they find Lihir's gold in sort of 3 years, the rate that they're going at the moment. So that's going to drive a lot of future growth.
So Newcrest is a standout, and you've mentioned Lihir Gold. Are you a fan or not so much?
Not so much, no. It's really just going to be a play on whatever the gold price does. If you want instant leverage to the gold price, it works for you, but long-term Newcrest is going going to win out, I think, provided you can buy it at the right price, and they're all pretty expensive at the moment.
So regarding ordinary, everyday mom and dad retail investors, Matt, what's the takeaway message on gold?
You might want to buy gold for a little bit of diversification, but I wouldn't have a huge exposure to it. If you think about the reasons why you would want to buy gold, it's an inflation hedge, but you can buy Woolworths as an inflation hedge. Woolworths will still command a certain amount of your income even if dollars go up. In the States, you've got Coca-Cola, you've got solid businesses like that which will continue to command a similar share of inflated dollars if you're worried about inflation, and a lot of people are worried about US dollar inflation. So I think there are other ways to play that story, and gold's not necessarily the cheapest way to do that.
Thanks for joining us.
All right, no worries.